Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. What if I told you a single potential price point for XRP reveals the entire psychological battle between fear and conviction in the market? We're not talking about hype. We're talking about billions of dollars in active, traded, on-chain that shows precisely how investors behave above and below this critical line. We have the data, so let's analyze what it could mean. Ladies and gentlemen, welcome back to the Crypto Republic. My goal here is to provide clear data-driven analysis. We cut through the social media chatter to focus on the objective metrics that can help us understand market dynamics. Today, we are conducting a detailed examination of XRP. We've seen significant market activity recently, and it appears to be centered around a specific price level, $2. We will look at institutional-grade on-chain data to understand why this level is so important and what the behavior of large-scale investors, or so-called whales, can tell us. This is an analytical briefing, so if you appreciate this data-focused approach, please consider hitting that like button and subscribing to join our community of informed participants. Let's begin and let's break it down. First, let's establish the context. The $2 mark has been a point of contention for XRP for months, ladies and gentlemen. As we can see on the charts, this level has acted as both resistance and support levels. Recently, the price dipped to approximately $1.82, creating uncertainty in the market. However, a combination of factors, including broader market recovery and recent news, led to a close above the $2 mark. This momentum continued, with XRP seeing an intraday week high of around $2.28. The key observation is the market's reaction each time. This $2 zone is tested. This is not random. It's a reflection of market psychology, which we can now measure. To understand what's happening beneath the surface, ladies and gentlemen, we need to look at a key on-chain metric, realized loss. In simple terms, realized loss measures when investors sell their holdings for less than they originally paid. It's a direct indicator of fear or a loss of a conviction in the market. The on-chain analytics firm Glassnode recently published a report highlighting a fascinating pattern. Their data shows that every time XRP has dropped below the $2 psychological level since March, there has been a significant spike in these realized losses, ranging from 500 million to over 1.2 billion per week. Think about that. For example, a drop to $1.90 in March corresponded with over 1.2 billion in weekly realized losses. A similar event occurred during a drop in April. This data strongly suggests that for a segment of investors, a price below $2 triggers a sentiment shifting, leading to selling even at a loss. When the price holds above this level, that selling pressure appears to subside. Now let's add another layer, the behavior of large investors. Analyst Ali Martinez recently noted that as XRP rallied, accounts holding between 1 and 10 million tokens began to sell, realizing profits on over 180 million XRP. From a risk management perspective, this is normal behavior for large portfolios. The critical question is, who is absorbing this selling pressure? The data points to a new source of capital entering the market. So how can we interpret this information? Let's connect these data points into a few key takeaways, ladies and gentlemen. First, the $2 level as a psychological indicator. The Glassnode data suggests that the $2 mark is a significant psychological level. Investors' behavior appears to change dramatically, above versus below this price, shifting from loss realization, selling, to holding for accumulation. Second, absorption of whale selling by new inflows. The selling from long-term whales is being met with significant buying pressure. A primary source of this new demand appears to be the recently launched XRP ETFs from major institutions like Franklin Templeton and Grayscale. These ETFs reportedly combine positive inflows of $130 million on their first day alone. Third, a potential shift in market structure. The introduction of regulated ETFs provides a new, consistent channel for institutional capital to enter the XRP market. This is a fundamental change that could influence the asset's supply and demand dynamics over the long term. What this analysis indicates is a complex tug of war. We have profit taking from one class of large investor being met by fresh capital from another. This is the sign of a maturing market. So when we synthesize all this data, we see a market at a potential inflection point. The interplay between retail psychology, real profit taking, and new institutional inflows creates a complex but fascinating dynamic. This analysis is just a starting point. In our next video, we will explore some potential future scenarios based on these metrics. We'll examine continued ETF inflows, could imply and look at other on-chain data to get a more complete picture of market health. I want to hear your thoughts on this data. What is your interpretation? Do you see the ETF inflows as a game changer? Share your well-reasoned perspectives in the comments below. If you found this analytical breakdown valuable, please hit the like button, subscribe, and turn on notifications. Our goal here at the Crypto Republic is to build a community that prioritizes data over drama. The financial markets are complex and often driven by narratives that obscure the facts. Our mission here is to provide clear data-driven analysis to help you understand the forces shaping these markets for yourself, ladies and gentlemen. The situation with XRP around the $2 level is a perfect case study in market psychology and shifting capital inflows. Folks, understanding these dynamics is key to navigating any volatile market effectively, in our opinion. Thank you for your time today. As always, I'll see you in the next video and in the next analysis. Once again, this content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, ladies and gentlemen, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.